Stan, please, if my voice starts sleeping, just let me know. Because I think they were complaining yesterday. All right.
Yeah, it did not long ago,
All
but
right. So good evening, everybody, and welcome back. What did you say?
no, just continue.
What did you say? All right. Let me also record on my end in case yours has issues. So good evening, everybody, and welcome back to another class. I told you guys that today we're going to be treating how to set stop loss on synthetics. But before then, I don't know if you guys have been looking at currencies as well, because today I am still on this JPY, so I wouldn't say I traded. We'll just say I'm still on it, right? And then if you can look, it was a type B setup. This is the 1 hour time frame for NZD and I told you that when you come to the chart, the first thing you do is to what? Go to the 4 hours time frame. We're still going to do um stacking a specific course. I just want to show you something. All right. So I told you that the first thing you do when you come to the chart is to check the 4 hours time frame, what price is doing. And if you look at what happened, they're mapping out structure. This was the point at which price changed character, change of character because he went what he
Sorry, Star, your screen is not showing.
sorry. Can you see my screen now?
Yes,
Wait,
yes, it's up now.
okay, okay. So as I was saying, this is the trade I'm currently on NZDJPY. If you look at what happened here, we had price coming in a downtrend, of course, creating series of lower and lower links. This was the point at which price did what? Took out a protected high, right? But then I told you that if it takes out, sorry, took out the protected high, that's the lower high. Okay, not at that point. This was a lower high, a lower low, a lower high, lower low. So the point, and that change of character went ahead to do was to break structure to confirm that what were now bullish. But again, we still had what another change character. The moment the price went below what is protected low. All right. So this becomes a lower high because he did what he put in what a new lower low. And then this becomes the next lower high because he put in what this lower. So which means that we now have what change of at this point and then a confirmation. Well, looking at what happened right after, price went and do what to take out this protected high. Remember that this is a protected high because it puts in what's a new low, and the highs in the downtrend are what protected, the lows are targeted. So price took out this high and did what puts in a confirmation. So here now you can confirm that what's currently bullish, all right, because we have this change of character and then this confirmation of change of. So on the 4 hours time frame now, we've established that okay, price is what price is bullish. Now, what's the next thing? Because you can see that this is an upward movement in price, change of character, break of structure, and then continuous price. So you go down to the 1 hour time frame, which is now at this point. So this is sorry, okay, this is the 1 hour frame. Now this is the trade in particular, this one, and this was the point at which I a mitigation to particular demand level. All right, mitigation to this particular demand level was the first trade. But then on the commission of that mitigation, we had price. This is a market structure now. This is the 1 hour time frame, remember. A sweep of the market structure on 1 hour. And then here you have what price puts in the inducement leg structure. You can see that the inducement leg was what created before price did what took out an external high. All right, you have the sweep and inducement leg of before price broke out of an external high, and then what happens? This becomes what your typical type B setup. This is the color trade that I'm currently on, All right. Now this becomes what your type B setup. What happens? You place what your buy position to. This is a sell. You place your. Let me see if this is the buy. So you place your buy position to. And then what something just to give what the confirmation on that particular leg. Okay, let's go down to the 30 minutes time frame. You would see what a pattern confirmation on this leg, whereby you can see the prices it came, there was something more like it, so just like what happened there initially, all right, and then it came back, pulled back just like this to mitigate and what continue buying. All right, so this is the confirmation on this particular POI, but then the POI itself was what our top. I think something like this also played out on NZ CHF. I told you that these things are things that occur what constantly. Even ESF, you would see something. If you didn't catch this, you didn't catch this, you would have what caught this one. All right. You notice that these are things that happen over and over and over again. You just need to be disciplined enough to or to check out these things time on time to see so that you don't miss opportunities in the market. But they play out like very, very often. Okay. Now back to what we're supposed to have for today, which is what continuation of our class on stacking on specific points. Remember that yesterday we had a class where I told you that when it comes to stacking a specific point, supposed to what? Do your stacking on 30 minutes, 1 hour. But then I told you that price can work. These engulfing candlesticks can be created in different ways, which means that it can be created in a long way, whereby between the top of the both candlesticks is what very, very significant. And that way you cannot be closing first 50%, by the way. But then, just for example purposes, I don't know, somebody was asking me to work on my course, so I've tried to see way around it on this derivative review. I'm not saying anything for sure. Let me see. It's really not just working. I don't know. I don't know. I'll try to see though if I can about it. All right. But then back to this, you have this particular bearish engulfing candlestick, a candlestick like this one now. You can't be doing it at the close, which is at this point. This is where the candlestick, right? You cannot be stacking at this point. Instead, you wait for price to do what, to pull back into the order block itself before you stack. But then this is not a valid stacking point in this case. Why? Because for this particular setup now, this has exceeded what's the first 50%. I think we did that. All your stacking should be what? And the first 50%, that's premium when you're selling, and then what? Discount you're buying. But then for today's class, I'm going to learn where to set the stop loss while stacking. As a matter of fact, I don't want you guys to look at market structure or the market as something you should be scared of. As much as sometimes it gets overwhelming, especially if you're a newbie. All right, it gets like a bit overwhelming. Everything looks new, the concept looks new, and that's how it is everywhere. That's how it's supposed to be. With time, you get used to it. I remember my very first time. The first time I came across technical analysis was October 2021. Crypto analysis, yeah, it was the one that I learned from then. Like the very first time, I would watch the videos. I would think I get what he's saying, but then know that this was what my chart looks like. Looked like then. Like I didn't know that. Oh, I need to like work on my weight and my break. I was just things like this, and I'm wondering how do I like analyze on something like this? Do you understand? But then with time, with practice, with questions, with community, this is how you learn. You look at what your mates are doing. You reach out to your mates. There are things that maybe you wouldn't want to ask me, maybe how to set this or how to do this. But then you see other people on the group that are getting it right. You can message one or two of them. I don't think there's anybody you say, oh, please, can you help me can you put me through on how to do this? And they'll tell you no. Depends on how polite you sound. People help people, to be honest. In my own trading journey, as at then, that particular group, I think I was the only girl that was learning how to trade then. And I would reach out to people, and a lot of them like put me through. Oh, if you're using a phone, it's not the same experience, but you have to do like this, questions from other people in the community to correct most of these mistakes. As overwhelming as it gets, the people that are understanding, they don't have two heads. All right? They don't have two heads. So you really need to do everything that you can. For those of you that are going to work and all of that, it just looks like the trading hours are going to be clashing with your own work hours. But at the same time, the market cannot open by 11 p.m. because that's when you're going to come back from work. All right? New York and London must be from 8 to 10, whether you like it or not. So you need to still make out time in between. Even if it's before you go to work, try to look out for these POIs. Most of the POIs that are trading this week, even the ones that are yet to trigger and the ones that have triggered already, most of the POIs are the ones that are prepared from on Sunday. All right. So weekends like this, you can go over your charts, go over the things that have been taught, go over the things that we've done so far. Look at what your mates are dropping on the trade idea groups. Go back to your charts, check if they align with what you understand. Ask questions, oppose the ones that you have to oppose, the ones you don't agree with. All right. The main purpose of the whole and or the community is so you can interact with anybody there. Most of them understand faster, fine, but then everybody's equal. You can look at somebody's chart. Oh, please, why did you do this? Do that? You learn. That's how you learn. Curiosity is the greatest, will I say, virtue that you can have when it comes to this trading. Just staying curious, trying to find how somebody did this, how somebody did that. That is how you understand. Okay. Now back to what we're supposed to be doing, which is was stacking at specific points. Where to set your stop stacking in previous class. Your point of interest can be what on the 1 hour. It can be personally for me, I don't like going below 10 minutes. I have some students that actually do 15 minutes POI and the rest of them on the like a start group. But then for as a person, I don't like going below 30 minutes because as a matter of fact, whether you like it or not, synthetics has what constant volatility. Although doing like holidays like this Easter period too, you notice that there was what reduced volatility in the market. Even last year Christmas as well, from like 21st to like 10th of January, you would realize that there was also what reduced volatility in the market, which I think may be attached to the fact that there is what reduced trading activities. There's lesser traders in the market. Although I told you that the um, footprints of traders does not really affect the synthetic market because it is printing its own numbers itself. It does not rely on whether you're buying or you're selling for it to move in a direction. Do you understand? But then the holidays, I strongly believe that the holidays usually affect the synthetic markets. If you notice this Easter period as well, there was what reduced volatility. So they just like reduces a bit, but not as significant. This is like the whole pause that happens on currency pairs. This one is not like a pause, it's just like a slow down. Do you understand? All right. So you can get your POIs on like 30 minutes, you can get your POIs on 1 hour, 4 hours. Any of them that you back first because it's going to be subjective. There are people here that may even become scalpers at the end of this class. There are people that would swing. There are people that will be day traders. All right, all of it is you're able to tweak those things into your own trading strategy in a way that what leaves you consistently profitable. You're registering more wins than losses. Because at the end of the day, that's the goal of every trader to buy when the market is buying, to sell when the market is selling. No matter how you're able to achieve that, even if it's 5 minutes, 1 hour, and all of that, right? However, you're able to achieve it, as long as you're right side of the market, that is what you want to do as a trader. All right. So for me now, I mentioned that but POIs on synthetics can be from 30 minutes and above. All right. But most of the times why I go like to the 2 hours time frame, like I told you in the other class, is because of the fact like when I feel like the 1 hour is a bit ranging, and I want a little bit of clarity. I don't want to see multiple engulfings. All right, I just go to the 2 hours time frame for my start instead. This is because of the fact that you understand that one candlestick on the 2 hours time frame will be 2 on the 1 hour time frame. So when you have candlesticks ranging on the 1 hour time frame, if you go to the 2 hours time frame, it will become half of what it was 1 hour frame, because 2 candlesticks on the 1 hour time frame is 1 on the 2 hours time frame. So it becomes more compact, more organized. All right. So when you have things like that ranging, you can just go to for your confirmations on the 2 hours instead. Or when you feel like it's too straight, like it's too volatile, probably just mitigate and is running. All right, you can go down to the 30 minutes for your confirmation so that you don't miss the engulfings there. That's how like you kind of like do this inter time frame thing. All right. Now I already told you guys that when it comes to stacking, you're stacking on what the mitigation of these engulfings when the difference between both of them is negligible. You stack at the close, more like continuation. All right, more like continuation. You just stack at the close. Where do you set your stop loss when you're stacking? That is a very important question. The reason why it's an important question is because of the fact you know that we're stacking. These levels are different levels. Stacking at let me say the straight you open at this level now cannot have the same stop loss at the trades you open at this level. All right, because the difference between both of them is what very very big. So when they should have different stop losses so that your risk is what still managed alongside. All right. So let's use this one for an example now. After making your analysis, you have what your 50% Fibonacci 2 set. How do you then stack? Okay. Now for your entry, I told you that your entry is what your first starting point, which means that at entry is the first level at which you will start looking to stack. Now your entry is going to have the same stop loss. This is your entry. Your entry is going to have the same stop loss as the normal position. Just like how on currency pairs now, you've gotten your entry, you've gotten everything. All right. So if you're going to be setting stop loss for your entry, it's going to be what the same. This is your entry. This is what your stop loss price is supposed below your entry. Like here now, you have what your. Sorry, let me expand my screen because of this cursor issue. All right. So here now you can see that we already have a hammer candlestick as confirmation on this POI. Okay. Price has mitigated entry. You must always wait for what close below your entry before you just take now. It has close below entry. So this is the first point at which what you're stacking. You're already stacking like percent of your entire risk at this level, 40 to 50% of your entire risk at this level. All right. So now it's have stop loss as the position. This is it's what your entry. So this is what's going to be what your stop loss. Now, most of the times, your second stacking points, majority of the time, say 60%, 70% of the time that you're going to make analysis, your stacking points will be very, very close to your entry. Like in this case now, you can see that we have what another stacking point here, which is at this level. All right. We have a stacking point at this particular level. Although this particular stacking point was missed, you can see that when price, I told you that stacking points like this, when price comes back them, when price closes far apart, what you want to see is actually price coming back to them. And price missed the entry. This would have been the entry. But then if you look at what happened, it was a missed entry. This did not come back fully to mitigate. All right. But then in a case whereby it actually did, this would have been what your second stacking point. All right. And since it's still very close to entry, you can use this particular point as your stop loss. So usually the first and the second stacking points, only if the second stacking point is close to entry. If it is the first and the second stacking point, which is your entry, and the stacking point close to your entry, can have the stop loss, which is what the original or the initial position stop loss. All right, which means that all of the trade positions that you stack at all of the trade positions that you stack at this. Sorry, I'm trying to clear my charts a bit. All right, all of the trade positions that you stack at entry 1 and all of them that you stack at this level now 2 would what have this point as the stop loss. Okay, but then proceeding now, you realize that okay, you're already going far away from the entry, and that is where the different stop loss will start setting in. Now this is the third position here. Now this is the third stacking point, which is what the engulfing candlestick that was formed in this particular 50%, the third engulfing candlestick. Sorry, the second engulfing candlestick, but third stacking point, since you're in your first stacking point. All right, and I told you that when price closes at different prices, you can see the close at this level is different from the close at this level. So what are you going to do? How do you map out this point to what pull back to it before you stack, just like this? All right, this becomes what your next, just like this. Now you can see that this is the entry for this stacking point, this level here now, which is quite far from this particular stop loss. So you cannot be stacking at this level and using 759 as your stop loss. It's not possible. So what you're going to do, the same way that you treated your order block is the same way that you're going to what treat this. Your specific stacking points are actually what they are like entries. They're like re-entries on synthetics, right? These specific stacking points are what like re-entries. So just like you would have treated your normal entry setup, that is how what you organize your stop loss for something like this. For something like this now, this particular sell, what happens? Although you may decide not to place your sell to, okay, but then you're going to, this is the entry now, and then your stop loss will be what somewhere just above. All right, same way you set what your entries for your normal setup. That is how you treat what this stacking points. Okay, so instead of having a stop loss of this level here now, way above that point, all right, this is now going to have what a stop loss just above that particular stacking point. So every trade that you open at this particular level, we have what a stop loss of around 740, I'll be 741. All right, this will become what their stop loss. Every trade opened at this particular level now, that's your entry level, their stop loss will be what 759. Every at this level, the stop loss will be what 759. But as you come down to the next stacking point, the stop loss will be what at 740, just above what the engulfing. Just like you got your stacking, your stop loss for what your entry, your initial entry. That is how you create what your stop loss for your stack point 41. And then you can see that was the last engulfing that price created before it broke down, before it broke out from the 50% price leg. All right, the engulfing was created. Price came back to mitigate our third standpoint and then did what broke out of the discount with full force. What you realize is that these stacking points that were created in the first 50%, all right, price hardly takes them out. They actually usually, like most of the times, this is something that has been texted multiple times. Usually they're just like stepping stones to continue price. All right, but hardly does price do what getting into what this 50% discount. You start having demand zones that can send price back up temporarily, and that is why I don't recommend stacking in the second 50%. If you look at something like this now, this is an engulfing candlestick where people would have been looking to stack. For those people, that's mitigated the demand level at this point now. And then there was a temporary pullback to the upside. This is still an overall down. then stacking at this level now makes you susceptible to what? To price what? Pulling back on you. Every trade that would have been open at this level now, that were taking it out before was still, it's really not what something that you want to what afford to do. All right. So when you're stacking, you're in the premium. When you're stacking in what? In the discounts when you're buying, in the premium what? When you're in. And then these stacking levels, according to the level that they are, have what? Different stop losses. Just the way you generate your stop loss for your inner setup is what you do what? Yeah. Like if you look at this part, this second one now, which was more like a confirmation to this particular point. Now, if you look at what happened, this was what? Another block. All right. Just like our pattern confirmation, we had, let me take this off now. We had price, create what? This inducement, broke structure, came back again to create structural liquidity, making this what? A proper what? Type, um, a proper pattern confirmation for us. It was a valid order block. But if you look at what happened, price what took out that valid block without confirmation, without a reaction to it, sorry, a valid reaction or a significant reaction to it, took it out and did what? Sold back. And I told you that in cases like this where this happens, you actually don't need structural inducements before calling this a valid reclaim block, because when a reclaim block is created by the failure of a valid order block, then you can trade it what? Without structural inducement. But when it is created by another block that does not meet your validations, then what happens? You're going to what? Wait for structural inducement before you sell. But in this case, now this was what? A valid order block that was expecting order flow and everything, broke structure in line with the trend, premium discounting balance, this and that. All right. So it becomes what? Valid for you to what? Want to sell from what? The order block level, which is at this point, I think on the 1 hour, a bit reduced, sorry, on the 1 hour time frame. So you're looking to take a sell from this particular point. Let me go to the 1 hour to make sure I am not making mistakes. All right. Okay, so marking out from the bearish candlestick itself, the bullish candlestick, sorry. This is where the entry is supposed to be. And then the stop loss can be above here, depending on you. If you want to cover the reclamation leg, since it was not big, or if you want to place it just below the order block, you can still do that. But then let's do something like this. And then you're targeting what's the weak low. You understand that targeted lows are what's called weak lows. Protected lows are strong lows. Targeted highs are called weak highs. Protected highs are what? Strong highs. So whenever you hear the concept of strong and weak, just relate it to protection and targeting. It's the same thing. All right, just different names for the same thing. Okay, now looking at this now, price has mitigated this. Sure, okay, if price is what? Price is bullish or not, because taking out of that particular zone more like looked like a change of character. All right, so it should have been a zone that maybe you're skeptical about. Oh, I don't know if price was putting a new high, and then what happens? You decide to what? Wait for confirmation instead. Okay, but then let's continue. For people that would have been looking to stack at this level, when price mitigates the entry, the first thing you do is to what? Take out your 50 Fibonacci, and then you mark out from the stop loss to big profit targets, which is from this level to what level. So all of your stacking points would be done what? All of your stacking activities will be done in the first 50%. Now, if you look at what happened here, this was the first stacking point. The mitigation to the demand, to the supply zone, was the first stacking point. And that mitigation was what? With a hammer candlestick. I told you that when price creates a hammer, that is what the confirmation rejection from that zone. And that is when you go to your MT5 to open what? Positions on that level. Now, those positions that you would have opened, where is the stop loss going to be placed? Of course, it's going to be placed what? At this particular level. This becomes what? Your stop loss at this level, because it was opened what? At entry. any stacking point close to your entry, right? Any stacking point close to your entry, just like this, can have what? The same stop loss, just like this one. All right. Now, this was the first stacking point that price created for this particular reclaim block. And then where is the next one now? I told you all of the engulfings inside of the first 50%. And you can see that after that, price started selling down and it sold out of the first 50%. But then it pulled back again into this 50%. And what happened? It created what? Second stacking point. Now, if you look at that second stacking point, this was what? The second engulfing that was created here. This bearish engulfing candlestick. Sorry, to confirm, Stan, can you still hear me?
Yeah, I can.
When can you hear me? Okay. Is it cracking? Can they see my screen?
We can see your screen, but sometimes your voice will crack, sometimes it will be fluent.
That's very crazy.
Yeah,
Okay, but let me just continue.
I think everything was in
I
it.
will look for a way to fix it. I changed my location, that's why. And I think it's my network because just continue. All right. So yeah, now we have this next stacking points after the entry, which is what the entry is the first point at which you open the point at that level. All right. And then price that was pulled back again into the discount to create what? This second bearish engulfing candlestick. Now, for the fact that the second bearish engulfing candlestick closed at different levels, which is what you get the difference between this level and this level. What are you going to do? You're going to map out, just like you map out what your other blocks, you're going to map it out just like this now and wait for price to what? Pull back into it. Which price actually did in this case? It did what? It pulled back. Here you can see that price what came back to what mitigate that level. The moment it mitigates the level now, that is where you're going to have what? Your second starting point. You open what? More positions at the level of what? This mitigation. That is where you open what? More positions. But then let's look at something. If you see this particular starting point now is what's still close to your entry. You can see this particular starting point now is what's still close to entry. So if you decide to use what? The same stop loss as your entry, it is still what's very fine. If you decide to use the same stop loss as your entry, what? It is still very fine. Or if you decide, for me, most of the times when I used to do this a lot on 75S. All right. When I have something like this, what I just do is to take out my sell positions one, then I just put my stop loss at the entry itself. All right, something just like this. I may not extend my stop loss to the overall and stop loss for the setup. I just put my stop loss at what's the entry itself for my second stacking point if it's as close as this to the entry. All right. And then the third one was what? This next engulfing candlestick again that was created, which is this particular bearish engulfing what? Candlestick. This one here, this bullish candlestick and this bearish candlestick that engulfed it. Those are what the next stacking point. You can see that two of them were created at what? Very similar level. They close at very similar level. So what's the next thing you do? Instead of waiting for price to pull back into it, you actually what? You actually just sell. All right, you just sell. And you can see that this is what? This is three stacking points in the first 50% of price leg that price created. Your entry one, this one next, this one next. All right. Now for something just like this now, you can what? Still use the same stop loss at entry for your stop loss, but then you just what? Protecting the engulfing. Then the whole idea of what? Of setting stop loss is what? To just protect the engulfing. Because you understand that most of the times it is very hard to see price what come out to take an engulfing in 50% discount or premium, except it is already approaching what's premium in the case of a buy, or it is already what approaching discounts. It is already approaching what discounts in the case of a sell. All right. But most of the times you realize that these early sales in premium and early buys in discount, they are what always protected. And that is why when you're stacking, then the idea is just what to protect the engulfing levels. Hardly does price come to wipe them out. All right. So just protecting them is what you setting your stop loss. And then price what came back again to create what our type B type of entry as continuation now. Sorry, our type A type of entry as continuation. Here now you have what your sweep, which is at this level. We have a sweep at this level, and then price pulled back to create what an inducement at this level, which is what like the what do they call this now? The type A setup, and then a break of structure. So here we have what our typical type A setup, and then mapping out your week as your order block. All right, the order block right from the week here now. You're going to have. Wait, let me refresh this so that all of these drawings are removed. Where's there? Please can you come back in 10 minutes? Thank you. So here you have, so it's the same thing now. Price now came back again to that week to give worker structure, a break of structure, an inducement level, and then what? Another break of structure, making this what your typical type A setup. And then price approaches that type A setup and does what? Gives you a hammer confirmation for a sell. All right, gives a hammer confirmation for a sell, making it what? Making this point your first starting point. Now have what? The same it's going to have the same stop loss as this level. All right, this is going to have the same stop loss at this level. Now this is going to be your second stacking point, which is at this level, this particular engulfing. But you can see that the engulfing and this particular, the bullish candle and the bearish candle close at different points. All right, which means that if you are going to take this point now, this level now, as an engulfing, this is what you would opt out, anticipating that price pulls back into this before selling, before you map it out as what? As your bearish, as your stacking point. All right, but in this case now, this was not pulled back into, so you wouldn't have stacked anything at this level. Your only stacking would have been what? Send Fibonacci to look at that engulfings that made it what? To the first 50%. Now you take out your Fibonacci 2 or your gun box, you map out from your stop loss on your setup to what your take profit targets, just like this. All right, something just like this. Okay, and then if you look at the next engulfing that made it here, it was what? This one here. Sorry, it was what price pulled out after price created that engulfing. Now, what did it do? It pulled into what? Into the discount. But then we had what reject and then came back again into the premium. And this was the point at which we had what? Another specific point created, which is what? This bullish candlestick and what's this bearish candlestick. And if you look at what happened between two of them, they were created at different levels. They were created at different what levels. This was the point at which this particular one closed. This was the point which this one, and this was the point at which this one closed. And in a case like this, I told you that when you have something like this, you wait for what? For price to pull back into it before what? You call it your valid point to what? Stack at. And if you look at what happened here now, let me just take out this entire setup, I'll bring it back. All right. And if you look at what happened here now, price did what? Price now pulled back into that particular engulfing level, pulled back into the engulfing level, mitigated it, and what? Started selling, making it what? Your second stacking point. This is the second point at which you now open what? Position. Another engulfing stacking point was what? Created at this level. You can see that this one now, the difference between where they close is what's very close. So what happens when something like this happens? You just what? Go to your MT5. Immediately the bearish candle closes below the bullish candle, you go to what? Your MT5 and open positions at market price, which is what? Your third stacking point. So these were what? Three valid stacking levels on this particular point. Now, if I were to set stop loss for this one, so what do? If you look at this now, this is your entry now. That's the stacking levels that will open at your entry. They will have what? This stop loss above entry, which is what? The level of 752.0 seconds that we done on the entry. We have what? Stop loss at this level. But then the one that is done at this point now cannot have the same as this level. This cannot be the stop loss, all right? So you're going to treat it just like you treat your individual setups, which means that just like you would have set your stop loss, right, somewhere around here, this is how it's going to look like. So here now you're just protecting the engulfing candlestick. And even this one now that was opened at this level now, you can have your stop loss somewhere just like this. The whole idea of setting stop loss when it got engulfing is just protecting the engulfing level. All right. The whole idea of setting the stop losses was just to protect the engulfing level. So the ones that are very close to entry can have the stop losses set just the same entry, just at the same level of stop loss for the initial setup. But when price is already leaving the entry, then they are going to have different stop losses of their own, which the whole quest or the whole goal at the end of the day is just to protect these engulfings. Because you understand that this valid stacking points hardly does price which face to take them out. Hardly. It does sometimes, but this has up to like a 75%, 80% win rate when it comes to stacking. Hardly does price take them out, except the setup initially was not what the valid setups to start with. But for a setup that was going to go from, they have high chances of playing out. Very high chances of playing out, actually. All right. So all you have to do is protect the engulfings in case of pullbacks. Just protect the engulfings. Most of the time, you just pull back. They will pull back to mitigate, but hardly is it a pullback takeout. All right. So this is how you stack at specific points, and this is how you set stop losses. Right at this specific point. I don't know how clear this particular class is, because ever since I changed my location, the network has been a bit shaky on my end. But then if you guys should go through the recording and there's an issue with it, then we can repeat the class again. I already said that yesterday. But then if you have any questions as well, drop it on the question group. All right. I specifically did not answer some questions yesterday because you wanted to treat. But then today now, I'm going to now go through them. If you have any questions, anything you think I've not answered, you can tag in. It looks a bit complex, but when you familiarize yourself with it, you realize that it's actually straight to the point. Engulfings first 50%, then this is how you stack at the engulfings, this is how you set up at those engulfings. All right. But then I think the class we're going to have tomorrow will have to be on MT5 itself, because this is like practical, or this is like theory. Then I'll show you on MT5 how you open at those levels, how you set the stop losses at these levels. All right. Like it's just basically how to place trades in bracket stack, but on MT5 this time around. I'll probably fund like $100, $200, or $500, so I'll use it to practicalize the whole thing and look at it tomorrow. All right. So which means that we're going to have another class again tomorrow by 9 p.m. Still stacking at specific points, but this one in a practical way. For those of you that have attended this class, you can go through the recordings. If you have any questions still, you can always reach out to me via the question subtopic. I'm not really active on WhatsApp, so if you're sending me a message on WhatsApp, I mean, likely not see it, but always tag me on the group. I always check every single time. All right. So if you have any question, reach out to me there, and I'll see you guys again by 9 p.m. tomorrow. Thank you so much. Stan, please, you can end the recording.